Let's, in the meantime, bring on board Pralay Mondal, the MD and CEO at CSB Bank, joining in on the show right now to talk about how their quarterly performance has been. Pralay, hi, good morning. Good to have you today on ET Now. And it's quite heartening to see that, while you had suggested some NIMs pressure, and that's pretty much what the industry as well has reported, if you will, that NIMs definitely are peaking out. That's not reflecting in your earnings, at least in the first quarter. What's the visibility that you have on your margins going forward?
Good morning, Aisha, and good morning to your viewers. Yes, I think we had a reasonably good NIM last quarter, and hopefully we should be able to sustain a NIM between 5 to 5.5% this year, this entire financial year. Somewhere in between, because deposit cost is also going up for the system, and so is ours. Having said that, I think given our gold loan portfolio is fairly large, and there is a large NIM accretion there, so we have an opportunity to have a NIM between 5 to 5.5% this financial year. Of course, things will change over the next 7-8 years as our other portfolio starts growing.
So now that interest rates have peaked out and they are not going to come down, do you think this entire pressure in NIMs, which happened largely because of higher cost of liabilities, that is over?
I think it maybe one more quarter to go, because depends on the specific bank's tenor of the deposits and how the repricing is happening. And given how things are happening globally, I think you look at US, the way the bond yields have gone up because various events there. And a recent event in the RBI policy on the temporary CR escalation, which also has taken the bond yields. I think today it is somewhere around 7.2. Given that perspective, there is a little bit of a short-term pressure. Liquidity also today is around 32,000 crores in the system, which is pretty low. So I think there is pressure on both cost of deposits as well as deposit mobilization at this point of time in the system. So given this perspective, I think we have to watch for another quarter for the system. For us also, it's not too different, but I think we should be picking out this quarter.
How do you see your credit cost and cost to income ratio moving for the rest of the year?
Nikunj, our credit cost had been negative last financial year, and it's very difficult to have a negative credit cost sustained over a long period of time. Given that perspective, I think our credit cost should be, median should be around 0, but we may have a few basis points this year on the positive side. And on the NIMs, your other question was NIM, is it? So other than credit cost, you had another question, Nikunj. What was that question?
Yeah, so I basically wanted to understand that if I look at banks, one of the challenge from a market standpoint is really the employee cost and is the cost of operations. How do you see that moving? Because that is where I get a sense that a lot of banks are now trying to build in efficiencies.
Yes, absolutely. So for us, the cost is going to go up a little bit because we are building a new franchise for the whole SBS 2030 vision, which is for the next 7 years. So we are investing significantly into technology, distribution, people, leadership, and all of that stuff. So given that our cost is going up, accordingly, income, fees, interest, net interest income, everything is going up. So ultimately, cost to income is a ratio. So it will remain a little elevated for us for a while, and then it will start tapering down FY25 onwards when our overall businesses starts picking up, because all these investments we are making has a definite payback period, and based on that payback period, we will start seeing a glide path on the cost to income over a period of time. But currently, we will have a slightly elevated cost to income because these are all investments, not really cost. On a productivity front, we are doing pretty well, so we don't worry so much about it. Actually, we are doing better than ever before.
Okay, what is the outlook then when it comes to your OPEX ratios? Do you think they will continue to remain elevated?
What ratios?
Your OPEX ratios, will they continue to remain elevated?
Yeah, it will remain. See, we have to look at it. When you look at OPEX, it includes the CAPEX and OPEX which we are putting in, because CAPEX also runs based on depreciation policy through the P&L. So we are investing significantly into technology because almost everything we're revamping in the bank, including core system, including entire surround system around it. We are also adding 100 more branches every year. We are adding significant. Last year, we added 46% more people than what we had the year before. And this year also, we are going the same way. So because we are rebooting the entire franchise in the bank, cost is going up, but accordingly, the productivity and the payback period of these investments will also come up. So we are not so worried about it on the cost because eventually you have to invest in the back end sub stage. And this is the stage for us when you want to build a full 360-degree franchise. And now that we are rolling out significantly higher businesses on the SME, all our retail products are coming out. We have also rolled out credit cards through our partnerships. Our fee businesses are picking up. Our distribution is no longer just looking at gold, but looking at all the products and services. So all of these will start paying back FY25 onwards. So to that extent, these operations cost, OPEX cost, which you're talking about, a lot of investments will start paying back. So I think this is a limited period, 18 months to 24 months. After that, things will start tapering down. By FY30, our plan is to be below 50%, around 45% cost to income by FY30. But right now, it will remain elevated. Yes.
I also wanted to find out about Pralay was that you're already present in about 16 states, right? What's the strategy going forward? Do you expand more or do you focus on a particular geography?
So if you look at how our geography last year, 40% of our branches, additional branches of 100 branches were in North and West. This year, I think we are planning to around have 50 to 60% of incremental business in North and West. Even if you look at businesses like SME, more than 50-60% are happening in North and West. Wholesale, more than 60-70% is happening in North and West. So we are no longer expanding just in one particular state. Even in southern states, Tamil Nadu is doing very well. Andhra, Karnataka, all the states are doing well. And Kerala, of course, is our has been our core market historic basis. So we continue to do well there. But we want to be a truly pan-India franchise. And that's where we are increasing our distribution, businesses, product, processes. Even as we get into wealth business after 2 years, that will be mostly West and not West because a lot of wealth businesses on this part of the country. So, and we are also working with various partnerships, whether it's on the broking side or on the insurance, mutual funds, and all of these. This also specifically attracts a particular set of customers. So, given that, I think we are looking at a pan-India full franchise and a true blue universal banking franchise. We have that license. We have not leveraged in past, but we are looking at leveraging in full flow.
Pralay, great to have you on the show today. Thank you so much for taking the time out.
Thank you, Aisha. Thank you for having me.
That's the word coming in from CSB Bank.